Welcome to the Norbloc podcast. The digital regulatory landscape is getting increasingly complex, with new legislation coming into play in Europe that will have significant impact globally. What am I referring to? The Digital Service Act, the EU regulation aimed at preventing illegal activities online and safeguarding fundamental rights. Welcome to Norbloc's stage. I'm Alkis Therokanis, Business Development Manager at Norbloc, joined here today at Vias in Athens with Penny Spyropoulou, Legal Advisor at Norbloc. Welcome, Penny.
Hello.
Today, we're diving into a topic that's been making waves in the tech and online world. The Digital Service Act, a significant legislative initiative coming from the European Union. Penny, tell us about the DSA. What is the Digital Service Act about? Why is it being introduced?
So, in short, the DSA is an ambitious regulation aimed at safeguarding the digital realm from illicit content and activity and protecting users' fundamental rights by doing so. This regulation is a part of the European DSA package and fits into the greater landscape of legislation that has been adopted to shape the digital space, complementing the GDPR, the e-commerce directive, and of course the Digital Markets Act. So, what is the DSA's target? Since August 2023, and for the time being, the DSA targets very large online platforms and very large online search engines in the likes of Google, Amazon, Booking. It imposes further obligations to regulate online content, but also implement know your customer and know your business processes and perform checks to ensure the safety and security of their marketplaces and platforms. We should note here that the framework operates overall asymmetrically. It imposes more stringent rules on larger intermediary services with big societal impact and less stringent in smaller ones.
So, Penny, you briefly mentioned that the DSA is already in effect for major players in the digital realm. But what other entities need to be aware of this regulation now?
So, from February 17, 2024, the DSA introduces new provisions targeting all online intermediaries. The emphasis is given in limiting their influence and thus protecting users' rights and interests. Since August 2023 and until February 17th, we had only the very large online platforms, and from now on, all players come to the game. So, online intermediaries are taken to include a broad spectrum of online services, social media platforms, e-commerce establishments, and various other digital service providers. While the DSA is commonly linked with the regulation of prominent tech giants based in Silicon Valley, it's important for everyone to be aware that the new obligations will also impact numerous smaller European service providers. These services are mandated to assess the societal risks associated with their operations. For example, the dissemination of harmful content and its potential impact on elections, human rights, mental well-being of users, but also economic and consumer risks. Thus, these entities are required to implement measures aimed at mitigating the identified risks, whether this be implementing more stringent KYB and KYC processes or verifying users with all that hassle that this might entail, especially for small and mid-sized enterprises.
It's clear that the Digital Service Act is coming to provide further protection to users and consumers within the digital space, and it's doing so by obliging online platforms and marketplaces. And what are some of the new rules that are being introduced that these platforms and marketplaces will now need to comply with?
The DSA establishes robust safeguards against both individual and systemic online harms. For example, it imposes obligation for online marketplaces to combat the online trade of illegal products and services, while at the same time it creates a framework based on transparency and accountability for all digital platforms, and it is doing so by recognizing the diverse level of risks and responsibilities inherent in different digital services. The Act categorizes online intermediaries based on their business service type, size, and impact, thereby establishing distinct levels of obligations, meaning that larger, more influential platforms are obliged to take further action rather than smaller ones. Worth highlighting here is one crucial new obligation by the DSA, which pertains to online platforms and the requirement to implement more stringent KYC processes. So, in the past, basic KYC for marketplace sellers involved simple checks on owner identification, company administrative IDs, and bank information. But what has changed now? Under the DSA, sellers are now required to be traceable, compelling marketplaces to verify vendor identities through enhanced KYC and anti-fraud measures. This means a much more comprehensive approach to KYC checks. For example, marketplace operators must provide tax authorities with a range of seller information, including contact details, identification documents, bank particulars, and product details. Furthermore, on the one hand, sellers must certify that their offers comply with applicable laws, and on the other hand, all platform providers must exert reasonable efforts to verify the reliability of a seller or trader of information. To do so, platforms may use official online databases or reliable supporting documents. In cases where information is inaccurate or incomplete, the platform is obliged to rectify the data or prohibit the trader from participating on the platform.
Okay, so having established these new responsibilities regarding user protection and KYC, how can marketplaces and platforms prepare for the DSA? What measures can they take to align themselves with these new obligations coming February 17th?
With the deadline fast approaching, all online intermediaries should be able to align with the new obligations in order to avoid the severe penalties that can reach up to 6 to 10% of their global annual turnover and even reach the staggering 20% for repeated offenses. So, to answer your question, all marketplaces and platforms should be able to answer the following three main questions. First of all, whether they do currently collect and verify the required data from sellers for other reporting purposes. If they do so, they can use this information. But if they don't, they need to adapt their processes and systems with the installation of a KYC onboarding platform. For example, here at norbloc, we offer Sancus, which is a KYC and customer due diligence platform fully equipped to tackle the additional requirements imposed to marketplaces. From data and document collection to identify verification for individuals and vendors, Sancus can be tailored to fit the scale of every marketplace to achieve optimal results in KYC while remaining GDPR compliant, which brings us to the second point. Whether there are any adjustments needed to their terms and conditions or consent policies to facilitate seamless data collection from sellers and meet notification requirements. If they do so, they need to use an onboarding solution that incorporates the T&Cs within the vendor onboarding process and identify new or additional steps required to enhance the protection of the data they collect. And the final question, they need to evaluate all existing processes for communicating with buyers and users and ensure a journey that respects customer experience along with regulatory requirements to avoid interactions that jeopardize their credibility. Moreover, I would say that it's very important to explore any potential synergies with other regulations or laws that share similar collection, verification, and reporting requirements, streamlining efforts for efficiency and compliance. They need to stay ahead of the game to ensure their platform not only complies but thrives in an evolving regulatory landscape.
Looking ahead, now that you mentioned streamlining efforts and staying ahead of the game, what is the future trajectory of the Digital Service Act, and how might it shape the digital landscape in the years to come?
To grasp the core of the DSA Act, it's essential to examine it in conjunction with the broader initiatives of the EU aimed at fostering a fairer digital environment. A notable illustration of this is the Financial Data Access Regulation, known as FIDA, which essentially embodies a vertical implementation of the DSA Act, enforcing a new set of rules to create a more equitable digital landscape. In essence, FIDA represents a significant move towards financial liberalization and has the potential to spur digital finance in Europe. Because while aligning with the broader objective of making the EU financial sector more innovative and integrated, the primary objective of the FIDA proposal is to enhance seamless connectivity, often termed as interoperability among various data spaces. These data sharing schemes introduced by FIDA establish obligations for both data holder and data users, who must reach a mutual agreement on the rules and the technologies to be employed. Essentially, we're referring to multiple parties contracts. To this effect, fintechs and SMEs are obviously actively advocating for this, as they seek inclusion and active participation in this evolving landscape. Additionally, FIDA aims to establish a structured framework for data intermediation service providers, and for the first time, the term fair compensation, representing the fee associated with utilizing this interoperable API, will be introduced. In fact, what this data sharing scheme entails is the commercialization of premium APIs. And in this context, we should mention that norbloc solution FIDES could serve as a pivotal component, in my opinion, functioning as leading technology for secure, private, and transparent data sharing that puts the data subject empowerment at the forefront, ensuring full control over their data in line with the GDPR and all similar EU regulations.
Great. So to wrap up, Penny, from everything that we've heard here today, what are the key takeaways for digital platforms and marketplaces?
The deadline for the DSA is looming, February 17th. The bottom line here is that the online platforms and marketplaces will need to evaluate current processes and take all necessary measures to upgrade their KYC procedures to avoid the very hefty fines that could be imposed. Lastly, looking ahead at the EU's aspiration of creating a thriving data economy within the region, and knowing that the regulatory landscape will only continue to grow, it's important to consider technology, specifically regulatory technology, that is flexible, transparent, and has the ability to scale alongside company growth, but also in tandem with growing regulatory complexity.
Thank you, Penny.
Thank you very much.
Don't forget to visit our website at www.norbloc.com for exclusive content and updates. Thank you for listening.